This is CNC World, a new perspective.
U.S. President Barack Obama has defended the administration's handling of the 2008 financial crisis on the 5th anniversary of Lehman Brothers' collapse.
The president says, although the economy is on the mend, it's not yet where it needs to be.
We've cleared away the rubble from the financial crisis, and we've begun to lay a new foundation for economic growth and prosperity. On this 5-year anniversary, we should take note of how far we've come from where we were 5 years ago.
He says Americans need to keep in mind the remaining work that needs to be done to strengthen the economy.
We need to grow faster. We need more good-paying jobs. We need more broad-based prosperity. We need more ladders of opportunity for people who are currently poor but want to get into the middle class.
5 years ago, the collapse of Lehman Brothers investment bank marked the beginning of the global financial crisis. The crisis forced the U.S. government to step in and bail out banks with billions of money to avert a financial meltdown and stabilize the economy. After mentioning signs of progress, Obama acknowledged that middle-class families have not benefited enough from the recovery. Monday's speech kicked off a series of economic events planned for this week. After weeks of focus on Syria, Obama will try to put more emphasis on the economy. He will address the Business Roundtable on Wednesday and conduct a meeting on Thursday with his Export Council. He is also expected to travel to a Ford assembly plant on Friday to highlight the success of the government auto bailout. Obama's remarks follows a report released by the White House economic team. The report has concluded that the administration's policies have helped support the economy and strengthen the financial system. However, critics have said the recovery was disappointingly slow and the unemployment rate remained high at 7.3% despite job growth. They also have expressed concerns over the widening income gap between the very rich and the rest of the population, as well as stalled Wall Street reform.
Some economists agree that quantitative easing has helped buffer the U.S. economy following the 2008 financial crisis. They say the country's economy is expected to recover more strongly next year.
Wooden Chen, treasurer of Treasury and Market Group of China's CITIC Bank International Limited, says the program is an effective policy to stimulate U.S. economy.
Yes, it's quite effective, I gotta say, because it's simply, if you look at the U.S. fundamental indicator, I couldn't imagine if they don't have any QE. I think definitely unemployment rate would go through the roof. Definitely the economy would not grow near 0%. Definitely they would got many more quarters which they got negative growth. So I definitely believe, money growth, the money supply growth, this or that, even though the velocity of the money changing hand is not as fast as in the old time, but at least because of the large increase in the money supply, it helps the economy.
Larry White, professor of NYU Stern School of Business, says 5 years after the global financial crisis, the U.S. economy is showing signs of a slow economic recovery.
We clearly are in much better shape than we were in 2008. The major financial institutions are better prepared, they have more capital. The regulators are certainly more conscious of potential problems. Generally, the strength of the financial sector is much better.
To prevent financial meltdowns like the ones of Lehman or the insurance giant AIG in the future, Obama signed the Dodd-Frank Act into law in July 2010. The legislation increases regulatory oversight, especially of the biggest banks. But experts still have some concerns about the financial sector's ability to withstand another Lehman-type storm.
There's still some things that are a little make me uneasy. First is we still have very large financial institutions, and despite their higher levels of capital, you still have to worry. If they got into financial difficulties, what would happen?
5 years after the collapse of Lehman Brothers, the U.S. economy has seen modest job growth, but unemployment is still at 7.3%. and the income gap between the very rich and the rest of the population has not been as wide since 1928.
While the economic recovery in the U.S. is gaining more and more ground, economists predict that it will still take a few more months for unemployment rates to decrease significantly below the current 7+% rate.
This is still not our typical robust recovery, and I think that it would be some time before we see a truly robust, what we're used to in terms of job growth and economic growth, in the beginning phases of a recovery. I still think that it's going to be somewhat subdued.
The recovery has been a lot slower than almost everyone had hoped. Unemployment is around 7.3%. That's still higher than most people would like, at least something in the 6% range, perhaps even 5%, is where most people hope the economy could go, and we're not there yet.
While some risk factors such as the European debt crisis have not been completely resolved and may still impact on the U.S. economy, general trends point upwards for the third and fourth quarter of this year. Most economists predict the country's economy to grow about 2.5% by the end of this year.
This is CNC World, a new perspective.